All right, welcome everyone. Welcome to the second to last day of August. My name is Kevin Hurley and we'll have our market view commentary for today. I want to go over a couple things to start off that'll help you with the uncertainty. As we start off here today, a lot of people ask me, and it starts with, how do you deal with market uncertainty? And anyone that's been with me for a while, what's the answer? How do we deal with market uncertainty here at Hurley Investments? Wait, there we go. I love it. We add protection. Now, protection makes money. Should just put it this way. Protection makes money, and 2 out of the 3, can't spell right, 3 ways the markets move. Up and down. If the market is sideways, we are overpaying for protection. And that's somewhat what we're dealing with this year. So it's interesting because I had a conversation with a new person. He said, you know, this year you're not doing as well as you've done in other years. And my first comment is, that is true. That is true, but the good news is the year isn't over yet. So just because I'm not doing as good as I've done in previous years, the year's not over with. Give us some time. But what it really comes down to is the methodology. Methodology. And there's a couple things that your methodology has to do. Number one, it has to work over time. And this is the big one, that if you hear buy and hold truly hasn't worked since the end of the Vietnam War. So it has to work over time. Number 2, which I find important, it has to work more often than not. Which means your probabilities are that it has to work 70% of the time or more. And 3, it has to appeal to the market weaknesses. If it doesn't do those things, only works in market strengths, doesn't work over time, doesn't work more often than not, you are in trouble. You are not going to make money on a consistent basis. You're not going to have your nest egg giving you the ability to make that money. Now, there are some qualifications. To the methodology. So, what do you think are qualifications for a successful trading methodology? So let's just change that. For a successful trading / investing methodology. So what are the qualifications? Or in other words, what do you guys expect out of me? Well, what would be the qualifications for a successful trading methodology? I just had 4 answers come in right at the same time. Take advantage of market buy protection. So there we go. Protection. Protection during downturns. I love it. What else? Oh, good one. Clear rules for entry and exits. I like this one. Adjustments. Ooh, there's another good one. Proven. And that proven really is not fair to say it's proven by back testing, because you know that. But it has to be proven. Anything else you guys would like to add to it? Ooh, I like that one as well. Understandable. Right? The theory has to be understood. Anything else you might want to add in here? Because I would agree with all of those. I would agree with all of those. So here are the HI qualifications, which is a lot of that. Ooh, we have a couple more. I really like it. Good execution, I'm going to put under the clear rule. No, that's different. Let's put it this way. Good, can't see, got the in front of me. Good execution and repeatable, which repeatable is the big one, right? Repeatable under any market qualification. So it's funny that you guys have said this, because part of the Hurley Investments qualifications comes down to 2000 and 2008 profitability, which I think were important. I think you have to work 40 hours a week and sometimes more, meaning you have to be willing to, when we have elections and things occurring over in the Middle East, things occurring in China, things occurring in Europe, you have to be up and seeing those market opens and market closes. You have to be able to run the calculations, meaning you don't trust a program, an algorithm, something that like that. You don't buy a subscription. You run your calculations yourself, like we did yesterday. You have to run the numbers yourself to verify the results. You have to have gone through almost every education possible. But sometimes I am buying things to prove that they don't work. You have to have your own money working the same process. And that's a big one. If your money's not doing the same process and not doing the same thing, you have no right to be running someone else's. If your money's not at risk in the same way, it's pretty damn hypocritical to be doing any type of money management if you're not doing it yourself. Here's some of the tougher ones. Mentally able to follow the methodology. Too many damn people quit and go to something else. Too many people start one thing and they give up and they go start to try something else. Whatever is shiny, they run to that day. That's never helpful. Willing to not have certain clientele. If you're out there gathering every penny from every person, you're not doing anything that is creating or managing a portfolio to their risk tolerance, to their needs, because one size does not fit all. And one of the most important ones, willing to make adjustments based on market conditions. And I'm going to put a slash fundamentals, because as fundamentals change, you need to change. I bring that up because as we're looking at things, I talked about it last week, we have some uncertainty. Reserve Chair Jerome Powell said on Friday, while the bank could begin to reduce its monthly bond purchases this year, it would be in no hurry to hike rates. That gave the market a little bit of a pause. His comments came as there are increasing signs that the pace of the U.S. recovery is slowing as consumers put off spending and businesses delay plans for a return to normal operations. This week, economists look for Friday payrolls report for a guide as to whether there's any slowdown, with an early estimate suggesting 750,000 new positions added in August. As I read that from Bloomberg this morning, I read into it a couple different ways. Out of curiosity, how would you read into that? Because I'm going to be honest with you, there are a couple things that bother me with his comments. And number one is obviously, as I said last week, they're not sure what's going on either. To think they understand is kind of ridiculous. But what did you understand here? Great comment, Randy, and I agree with you. The real unemployment rate is not 5.9. I would tend to agree with you on that. There are probably more people that could work right now that are choosing not to work. And obviously that's because most likely that they're taking advantage of the extra $300. And in some states, you can get paid $1,000 a week not to work. What else does it tell anyone? And I like that one too. And I'm going to agree with that one. Mary, that's a little different way to look at it. But the short answer is, so the comment was made that the GDP is not the real GDP. And I'm not going to say that it's not the real GDP, but yes, the pace of the U.S. recovery is slowing because we're at an all-time high for COVID yet again. People have COVID, our ICUs are filled up. We don't hear about it as much because, let's face it, we have a Democratic run House, Senate, and presidency. So the same things that get picked on by maybe the Republicans when they're in office are not going to be the same for the Democrats. The pace of the recovery absolutely sucks. We have too many people collecting unemployment. We have too many people with COVID. We have too many people in ICUs, and we have our death rates going up as high as they ever were before. So, of course, we're going to have a slowing as consumers put off spending. The short answer is it's really hard to raise a family off of $1,000 a week. A $52,000 a year job is difficult. Businesses are not trying to delay for plans of return to normal operations, but COVID is affecting that. And because of COVID affecting that, our economy is not growing like it used to. There was a comment made about bonds, but let me go ahead and run through this first for you. The harm the Fed wants to avoid. I found this pretty interesting. Fed Chair Jerome Powell isn't ready to dial back the loose monetary policy because he does not want to cause lasting harm. His words to the economy. Why it matters? With the economy progressing, everyone wants to know when the Fed will taper its monthly purchases of $120 billion worth of bonds. An emergency policy intended to keep interest rates low and financial markets liquid during the pandemic and obviously during the recovery. What are they protecting? They are protecting where the majority of people's real investments are, and that's in the purchase price of your home. If they're going to taper, you're going to see the inflated prices of homes come back down. And one of the reasons they're not so excited to do that is because there are a lot of people selling right now, and they're cashing in on a home price that is way overly inflated. I live in Utah. A $450,000 homes on Zillow right now is 1.5. That shows me an artificial inflation of price for home prices in the last 12 years to triple. It's interesting what they're saying. Powell spent a good time in his speech explaining why he thinks forces driving up inflation in recent months are transitory. At one point, he even warned of the perils of dialing back loose monetary policy after misreading inflation signals, a discussion that multiple Fed economists characterize as dovish. As central banks tighten policy in response to factors that turn out to be temporary, the main policy effects are likely to arrive after the need has passed. The ill-timed policy move unnecessarily slows hiring and other economic activity and pushes inflation lower than desired. So the comment was just made. Feds don't want the bonds to be hurt by inflation. 100% yes. But really, do we have inflation right now in our market? Do we have inflation that is artificially being held back because of the flow of money? Boy, I saw 7 yeses come up just like there was no tomorrow. Of course we have higher inflation. Where are the inflation numbers coming from right now? If we're talking about inflation, where is inflation right now? Because those same industries are going to take the hit when inflation comes down. Lumber, materials, big inflation in materials. Unfortunately, maybe lumber liquidators didn't get as much help as they needed. U.S. Steel. Materials has a huge inflation ticker symbol on it. What other industry has inflation? So Jim said taxes, groceries. So I'm going to switch that to commodities. The basic commodities, grains, milks, meats, those have inflation on them right now. And I'm going to separate out of that energy or oils. Oils, gasoline is also 100% higher in the last, what, 8-9 months. So essential commodities and oil or gasoline, definite yes. Anything else anyone can think about? What other industry or sector has ridiculous inflation right now? So containers, which is shipping, that is an industry that has ridiculous numbers right now, but that is a supply and demand. That is not necessarily an inflation driven. But yes, in the shipping industry, especially overseas or container shipping, there is supply and demand here in the United States. That's more so because we've got some harbors that are shut down again. There's no supply overseas, so it is real inflation. I do see supply overseas. We have a hard time getting stuff unloaded in Europe, unloaded in China. So I do see the supply and demand. I just don't see the ability to, they're bottlenecks. They're bottlenecks where product is not being unloaded. And it could get worse between the US and China. One other area that I'm going to say I see inflation in, pricing inflation, is home prices. I just made the comment. Real estate right now is in a bubble. We have a rise in inflation, a rise in prices in homes that is bubblicious. One other inflation area that there's a ridiculous rise in that is scary. Someone just typed in semiconductors. I also think that is a supply and demand, not necessarily inflation driven, just price driven. But I haven't done as much research on that one. That, though, again, does seem supply and demand. But inflation or pricing is cryptocurrencies. We've had a ridiculous rise in cryptocurrencies without necessarily the supply or demand in that area. I find it interesting because states of play, the personal consumption expenditures pricing and index, the CPI, which excludes food and energy, which is something everyone buys. Preferred member inflation was up 3.6% year over year in July, well above the average target rate of 2%. I don't know how you put the spin on it, but here it is in simple English. In simple English, we are in multiple bubbles. We're in a monetary bubble. There's too much money out there. Money is too cheap. We're in a housing bubble right now. We're in a supply and demand employment bubble right now. The opposite way, we don't have it. We got too many jobs for people that are willing to fill them. We're in a COVID bubble right now with too high of a percent of ICUs full again with COVID people. We're in a materials bubble right now. We've got so many bubbles that are here that somewhere down the line, we are in trouble. So the reason why I'm making these comments, is because at some point in time, it'll be technicals in our market that will dictate protection, not just earnings. And for the question that was just asked, will we protect positions even after earnings? The answer is yes, and we will most likely protect it like we did most recently with shares of Baidu, whereas you drop through a ton of levels of support, you start adding extra contracts of long puts to make up more on the way down than the stock loses. That's why I do what I do, because we've seen it work in 2008, we've seen it work in 2000. This is the ability to do and succeed with what we do. Last week, I called the markets to go down. Well, last week the S&P rallied 1.5%. I would have thought for sure markets went down. Last week we took off protection because markets were rallying again. We're taking a look at what markets are doing and we're saying, hey, you know what? We can't have protection on banks. We took protection on banks because they were moving higher. We can't have protection on some technologies because they were going higher. Protection was taken off of Apple, taken off of Baidu. No protection on Visa right now. We had to make some decisions for things that were changing. Pretty interesting as you go through Go charts. I really want to go through the last little bit. Next week, the month of August wraps up. All eyes will be on the August employment data, which happens on ADP on Wednesday and this Friday. But what happens next Monday? What happens next Monday? It's a holiday. You are 100% correct. The market's closed. So let's go into simple understanding of what happens on a holiday weekend at the close of a month. If anything, we might see a little bit of selling tomorrow. We'll see rebalancing occur tomorrow, although I think rebalancing occurred not last week, but the week before. We might go through a little bit of rebalancing tomorrow. We might see a little bit of purchase buying in on Wednesday. And then most likely Thursday and Friday, the volume dries up. There will be light volume as the big money goes on vacation. So we're going to watch tomorrow. We're going to see hopefully a little bit of rebound and some repurchasing on Wednesday. And then Thursday and Friday are, for all intents and purposes, days that you don't make adjustments. You won't have the volume that usually justify an adjustment or a change in strategy, which means next Tuesday, Wednesday, you'll see the real buy-in. These big brokers come back from work and their 7-day weekend, 6-day weekend, 5-day weekend, whatever you want to call it. They redeploy money for the quarter and off they go. It'll be interesting to see where we end up, but because of that, if you're going to ask me where we're going to go next week, I'm going to say markets are going to go higher. They're going to go higher because we won't have the volume that I would expect in the markets the 2 days before a holiday. The neat thing is, as we take a peek at the Dow Jones Industrial Average, if you're looking at this, would you say you're technically bullish or bearish? This is going to be a tough one to answer. If you're looking at this Dow Jones, are we technically bullish or bearish? Maud says bullish. Randy says bullish. Mary says bullish. ADP says tired. Russ says bullish. Do you have your technical crossovers on the RSI? I'm pretty sure you'd have it on a 5 and a 20, a 15 and a 30, a 9 and a 20. Do you have your crossovers on the MACD? Nope. You do not have a crossover or all three indicators on the MACD. You're still technically bearish, you're flat. Your preceding indicator that should be bullish and really matter right now is still technically bearish. Talk about uncertainty in the market. S&P 500, bullish, bearish, or who knows? Right, bullish. Have our crossovers, we have our crossovers, and we're just barely seeing the red underneath the black. Over the last week, the S&P turned, well, it's not helping me out at all, turned bullish. And last but not least, NASDAQ last week also turned bullish. Now there are a couple warning flags here, something that make me just a little concerned. When you start to see a distance from the 50-day and the actual price, when you get up to these ridiculous distances in between, you get outside of a standard deviation. It creates an overbought, and you usually have a pretty sharp correction back. When you see the distances widen between the 50-day simple moving average and the actual price, you're creating a deviation. And at a certain price point, you get a sharp correction back. I really don't like the deviation that's above a standard deviation in the NASDAQ. We're above the R2 resistance level. It could not get above it. Probably looking for a short-term quick correction. Sometimes, like back in April, May, it was very dramatic. Same space in February, it was very dramatic. These are technical flags. Fundamentals usually trump technicals, but we're approaching some technical sell-off levels in our market. If you ask where we're going to end September, even though currently on the S&P, we haven't even started September, I'm probably going to say we're going to be down a month. We're going to be down 1% because it typically is the third worst month that we have in our stock market. Earnings, not a whole lot going on. It's the last week of retail, as I like to say, but Zoom is getting crushed. Beat top and bottom line, but their growth was only 54% instead of 100 and something percent. Zoom is down $42.50 or 12.22% after hours. Zoom got crushed. In which case, it's probably going to be a bearish NASDAQ tomorrow as the new leaders leaders, especially in the NASDAQ, one of the new leaders really took it on the chin, and Zoom got beat up like no tomorrow. Pending home sales were negative. They're supposed to be up 0.3. We're down negative 1.8. Tomorrow we have consumer confidence. That will dictate usually our market open. ADP employment on Wednesday. Thursday, initial continuing claims, productivity, factory orders, not much there. Friday, the average work week, but you won't see the volume. So if we do have some bad non-farm payrolls, private payrolls, you could see an exasperated or an extra bad day. Don't worry, it usually will bounce back the following week. Internationally, not much internationally that caught my eye. Still in the same idea, running stocks higher into the seasonal pullback and taking long put protection off on some stocks that seem to be at a bottom or raising higher. So for some of these positions, I'm still going to be where I'm at. Not much has changed. Let's see, whose hands are raised? Mike Schultz, would you do me a favor and type in to the questions column what you'd like to say or mention? The market's biggest bull warrant software is a crowded trade and delivers a top new play. Mike, do I need to unmute you? Would you like to say something to the group? You are unmuted if you'd like to say something to the group, if you're able to.
Can you hear me?
Doesn't look like that's going to happen. So Mike, go ahead and type something in the questions column so I can get what you're asking there. Market's biggest bull warrant software is crowded. It most definitely is. Please read through this. Policies taped by the ear, but says there's much ground to cover before rate hikes. Please read through this article. Pretty important to understand what they're trying to do. I found the article, the Democrats' clear path toward passing a $3.5 trillion budget bill and infrastructure plan after breaking a stalemate. I would not think we're going to hear I do not think we're going to see the stimulus plan push through. And it really comes down to this. People are getting back to work. If there's not higher taxes to cover it, and with people worried about higher taxes going to be working on their votes, I would think that that for whatever reason you would not see a $1 trillion budget infrastructure plan go through. It just doesn't seem possible. And in all honesty, I think the White House, with the fiasco that's happened in Afghanistan, maybe doesn't have the pull with the American public. I don't think the American public is, if you were to poll them, that they're as happy with the administration's work right now. So for those two reasons, I don't think we're going to see an infrastructure plan get pushed through until after the elections next year. The shipping crisis getting worse. Here's what it means. Do take a look at the lack of shipping that's being occurred and how that will affect consumer products and purchasing power. And that's not what I'm trying to say. That's going to affect GDP as people have less stuff to buy, especially when you have ports that are being disrupted right now with coronavirus shutdowns. Long Beach looks awful. I was just watching 10 shipping containers stack up over and over and over again when I was out there a couple of weeks ago, and went from having 4 ships out there to over 40 that couldn't be unloaded at Long Beach in California because COVID, because people were getting sick again. But a really interesting article on the shipping. Please do read through it, and please see what we're up against here. I found pretty interesting. I hope our iPhones will eventually go directly to satellites. If they're able to do that, I no longer have to go rent a satellite phone a couple times a year when I do some of my backpacking or fishing in Alaska. I'm unable to do that. I have to spend, really, it's like $670 for 6 days to have an iPhone so I can get some signal, I can see the markets. It would really be easy, and I'd be extremely happy to see iPhones turn into satellite phones. So please read through this on Apple. Another China's regular crackdown has wiped out billions. Here are the risks ahead. I found it interesting. I'm not sure I completely agree with it, but I do want you guys to see both sides of the story. Please read through what this means for China's crackdown and how it's going to affect us as we go forward. With that said, what questions can I try to answer for you guys tonight? Are there any questions you guys have that I can answer for you or comment on for you? So interesting. Mary just asked, so when are you going to put protection back on? And the short answer there is when I get those technical signals that tell me things are going to drop. So right now, for what we're trading in, the banks, Apple, and so forth, I don't have protection on things that are moving bullish. I was always taught you don't add protection on bullish moving stocks unless you have a reason for an expectation on the drop. So right now, I don't know. Usually you add it for September so you can get it through September and October and the next earnings event. I truly don't know, but that's why I watch the markets daily. Sign you talked about a result of lower volume being traded. Yes, when we have a holiday, Jim, lower volume usually occurs because big money goes on vacation. If they've got a Monday holiday, they usually take Wednesday, Thursday, Friday off. I figure they wouldn't take Wednesday off because it's the start of a new month, and a little bit of rebalancing usually occurs then. But you normally have lower volumes prior to the holidays and through that holiday time period. So excuse me. So that's all I meant by that. Ida, if the market's going to be bearish in September and October, again, my crystal ball says most likely, but 3 or 4 weeks ago, I made the comment that our country's in a monetary crisis. We have flooded the market with free and cheap money, which means everything that you would expect to happen, probably the opposite's going to happen. Being in a monetary crisis, you really have to go back to where the government flooded the market like they did in the 80s to combat inflation then, as they flooded the market with dollars. And it's a little on the unusual side. Is the market going to be bearish in September, October? Historically is. Historically, it's the third worst and then the worst month back to back. I don't know. I don't know, so I'll watch it daily and make the adjustments accordingly. But I would expect that we'd see at least maybe a little bit of a drop, not like the seasonal or usual drops, because again, we've got a lot of money in the system and there's a lot of pent up demand right now. But good question. The reality is, if we could figure that one out, we'd be all set for the rest of the year, right? Are there any other questions? Kevin, what happened to Apple today? Apple bounced higher. They didn't break out of their range, just to let you know. But Apple bounced higher. It could be on the thought that they might go directly to satellites and they might be a sat phone. But Apple went higher on some pretty good volume. Still didn't break above that 153. I would really like to see it break out to that 165 level. But the short answer is Apple got a bounce. All right, I don't see any other questions coming through. If there aren't any other questions, I appreciate you guys being with us. Thank you for being here tonight. They should be pretty easy to have this posted by tomorrow morning. Glad you guys are safe and avoiding the hurricanes. You guys take care. Have a wonderful evening, and I'll look forward to talking to you Thursday morning. Have a good one. Bye-bye.